Catherine, I suppose first of all currencies took a bit of a pounding against the dollar over the last 12 months. The Federal Reserve was quite fast to raise rates, and that currency strengthened in comparison to the euro and the pound.
Yeah, definitely. It started in June. In May, we both the US and the UK had 1% rates. They started going up by 75 basis points to really fight inflation. We did a quarter of a point in June, and then half a point, and then half a point again. So we got a full 1% behind them. And that's, been OK for us. It's not a big issue. If you compare us to the euro, we're low at the moment, but we have been much lower. And that was not this year. That was in 2019, 2017, when we had problems with our government. After Cameron stood down in August 2017, it dropped to 107 against the euro. And when May was in a muddle and they were trying to get rid of her in 2019, it also dropped in August to 107. So we've been there before, but I wouldn't worry about it. The US is our biggest trading partner for exports. We sell more exports to the US than anywhere else. And so this will really help a lot of our exporters to sell to the US. It also helps our countries that are competing with imported goods. And a lot of those imported goods are coming from the EU, who is our biggest import supplier after China, which is our biggest. But we'll never be able to compete with China, but we should be able to compete with the EU. And having a lower currency will help that.
So it definitely will help with exports, but a lot of exporters use components that they have to import. So their costs may well go up as a result of that currency differential.
It does depend where the components are coming from, and a lot of our parts are coming in from East Asia. So those currencies aren't that much higher, except actually the South Korean one is higher, but it's back to where it was kind of pre-COVID. So it's not... It's not quite the way people would make it out to be.
It's interesting to see how much the currency has moved off the back of sort of confidence in the United Kingdom, perhaps political stability in the United Kingdom, something that has been wanting for several years. The Rishi Sunak administration has sort of made its raison d'etre being boring, being the bringer of stability, and that might not be doing wonders for its poll ratings, but is that making the UK a more confident place for international investors?
Well, I think international investors looking for government bonds probably won't come to the UK. They will go to the US because it's the world reserve currency and it's paying a much higher interest rate than the UK and a much higher interest rate than the EU. So if I was looking for a home for large currencies, I'd be in the US at the moment.